Please welcome together with me here from the founder and CEO of NextChange, Yuan Li. Also, please welcome the founder and co-chairman of Hong Kong Blockchain Association, Jay Ling. And on the middle between them is David Ellington, the founder of Silicon Valley Blockchain Society, as well as Will Harburn over there, the founder of Ethfinex and the director of operations of Bitfinex. So I'm a little bit confused with Ethfinex and Bitfinex. Sorry, before we get to the others. What is going on, Will? Can you tell us?
Absolutely, yes. So I think a lot of people have heard of Bitfinex, which is one of the world's largest cryptocurrency exchanges. It's been around for nearly 6 years now. And it's very much focused on institutional large traders, professional traders. And Ethfinex is a spin-out of that, which now focuses on a different customer base and has very much played a part in focusing onto the new group of tokens growing up, having ICOs, and that's kind of where the focus is. And particularly, Ethfinex now has a new product which allows institutional traders to access Bitfinex, but controlling their own custody. So that was one of our flagship products when we launched. And we launched that about a month ago, and that means that it solves for institutional traders the problem of giving a cryptocurrency exchange control of their funds.
Okie doke, that clears it up a little bit more. Well, then the topic is, what's the most advanced crypto investor nation? So we've got here representatives from different parts of the world, Hong Kong, the USA, of course, and, well, question mark, everywhere, globalized, let's put it this way. Now, what is the difference between the investors and how is that, what does it come down to in the end? What makes an investor nation? What is behind it? Maybe we can start with the Asian setup. How is it in Hong Kong?
Well, you just look at my dress up, you know, the most handsome guy here, and also Hong Kong is the best nation for cryptocurrency, for sure. But anyway, Hong Kong actually has a lot of advantages there. Number one, very international. Small, tiny island, however, we have a lot of international talents there. Number two, full of institutional investors. Hong Kong possibly is the largest capital market on the Pacific Rim, and also possibly top 3 in the world. And number three, the Hong Kong government has been very supportive to cryptocurrency, blockchain development, and many other frontier technologies. So all of you here actually are very welcome by the government to be in Hong Kong. From the investment side, you get a tax refund, and from the talent side, you can get a very good condition for your immigration visa. So different from US, I'm sorry to say that they cut off the immigration. We welcome all the talents from the blockchain industry. And number 4 here, a lot of people are worried about mainland China's policy. Hong Kong would be interrupted. No, actually Hong Kong will be kept as a free island as China is closed up the door for the cryptocurrency and the blockchain industry. And the government specifically in Beijing told Hong Kong to keep up the talents, keep the team there, and also keep the project there. So therefore, I believe that the future, the best nation for you to have your project there, that's in Hong Kong. Of course, many people say Hong Kong is not a nation, but it's an independent jurisdiction. So try to move your project there, and the Hong Kong Blockchain Association will do our best to help you there.
So a very, very positive outlook for the future and the development and the government support in Hong Kong, definitely. Maybe before we look at it from an exchange side in Hong Kong, how does that compare to the US? Is the US really that bad as everybody thinks, at least here in Europe, that it is? The horrible news that we get?
In a word, yes, it is that bad. And profoundly disappointing. We, of course, I run a thing called the Silicon Valley Blockchain Society, and so we're based in Silicon Valley. There's 2 things going on, 2 dynamics in terms of investors. There's the institutional investors, obviously Sand Hill Road and the typical or traditional venture capital community, and then there's the partners and ultra high net worth and family offices. They've been very active, that side. It's only of late that the traditional institutions are getting in, of that type of institution, as opposed to private equity, pension plans, larger asset management firms. They're still holding off. We have horrible regulatory environment. There's no clarity from SEC, no clarity from FINRA. These are the two organizations that are primarily or directly involved with regulating our industry. So
With
we've
the
had
positive
to,
Delaware setups,
Huh?
even with the positive Delaware setups and these exceptions,
get
better?
I'm a fan of the industry, so I want to be frank. No, that's not enough. Just to have a Delaware corporation is enough. What you need is clear guidance, and it's not happening yet in the United States. Now, sure, we have a vibrant, I will challenge anyone in terms of the vibrancy of Silicon Valley and its support of entrepreneurs and tech entrepreneurs in general. You'll see the VCs primarily focusing on protocols, i.e. the actual software underlying blockchain technologies, but not in terms of all the speculative entities. We can't really participate really in the ICOs. You have to create an offshore vehicle in a Hong Kong, in a Singapore, in a Switzerland, and wherever else, Grand Caymans, to be able, as an American citizen, to participate. Now, is there a lot of money? Yes. My organization, we represent over $1 trillion in assets from all of our members involved. So we are definitely interested, and there's a lot of excitement, and we educate our members. But it's tough navigating and helping our members navigate.
Sure. Okay. Interesting to see this overview of the general market from the different sides of the world. Wassi, you're in the middle. How is it from a different point of view, not the society itself, but really how does it translate, how does this translate into the business of an exchange?
Let me share with you a little bit about, before we go into exchange, a landscape, because I've heard two very polar, opinions about two markets, but when you look at the landscape, there's more than 450 crypto funds in the world, and if you look at the largest distribution, 200 plus are actually in the United States. The largest funds are all in the US, and in the concentration, you have it in California, New York, and also Illinois. So basically, you have majority of the capital in the US. If I were to say that there is a significant nation right now, it's the US. The other thing that I would say is that in Hong Kong, what they have benefited from is the same thing gambling has benefited Macau. It's been an outlet. You can't do it in China, so everybody goes to Macau. You can't do blockchain in China, so you go to Hong Kong. So we've benefited dramatically from the barring of crypto activity in China, and Hong Kong has been the major beneficiary. But if it were just about the ecosystem and not talking about investors, then Hong Kong would not be the major beneficiary. But what Hong Kong is a major financial market. It has over 150 banks. There's already an investor community there. That's why they're able to act and have the background and expertise to react to this, and when you see roadshows that are taking place, especially from the US, of projects that want to raise money, Hong Kong is always one of the major centers that they always go to. So there's a balance between what's happening, but if you look at the landscape, it's a little bit more tilted to the US.
Well, wouldn't you say that the landscape as in capital? Sure, we have a lot of capital, but the hoops that we have to go through and what my members have to go through to be able to participate in these deals, I can't do anything other than, no utility token. Sure. I can't do, that's kind of a lot of the projects out there. I can't do, the security token bit is like, okay, but we still don't know what that really means. What happens when a company's sold? There's a lot of open questions what that security really gets someone. So yes, we have capital, there's lots of funds launched. I mean, basically we're supporting each other in what we're saying. Yet in Hong Kong, with China, Japan, Seoul, Singapore, regulatory environments, Malta, Gibraltar, Caymans, there's plenty of folks, Liechtenstein is coming. But it's still this patchwork, and I don't know how we're gonna navigate the next couple of months. I'm not counting on, it's like, okay, this is actually relevant. At our last meeting, we just had a political entity, the chairman of a political entity in the United States, ultra right-wing conservative Republican group, come speak to us because they're coordinating a 10-state strategy to do regulation and help regulation pass in 10 states, in 10 of the 50 states in America. That means there's no federal law coming anytime soon, which means SEC and FINRA can go, okay, we can drag our feet, not have to come up and answer these questions and give clear guidance. We'll just because Congress is not going to force us to do that, and we don't have an executive that's going to force us to do that. So we'll get to this. So it's just a pain in the butt, to be realistic, to members in our industry, which all of us are. What's real? What's real is a lot's happening over there in Hong Kong, but this, of course, you can't mention the word cryptocurrency in mainland, but you can talk about blockchain. And that's so you have to tiptoe around it. We just have these things to navigate.
Well, no, actually, I come back to the securities token issue. Hong Kong has the best advantage for sure. Hong Kong people are mostly institutional investors. Therefore, they love to see the compliance and the upgrade of the technology and also the backup of the asset and equity there.
But Jay, now that before we get to this type,
do a lot more, yes.
Before we get to the type of the investors and what the differences are, and all those unsolvable questions they seem at least now, sooner or later we will get the answer. But I don't know, does this, I would like to check with Will, because he's getting on a flight in a couple of minutes. Does this affect you? Do you care about how it is in Hong Kong?
I think we certainly see, so as an exchange, of course, we're serving customers, investors themselves, in countries all over the world. I think there's no single country that we can pinpoint as being where the majority of our customers are. They're extremely distributed. As an organization, we're also distributed in terms of operations in London, Switzerland, Hong Kong, Taiwan. And that means we're constantly in contact with law enforcement in many other jurisdictions, as well as the ones that we happen to be in ourselves. And the problem that we see is actually that much of the value of investing into this space, as opposed to securities or anything else, is the fact that you do get liquidity afterwards, that these cryptocurrencies or other tokens can be traded easily, widely, and everyone has open access to that. And the biggest challenge for us, therefore, and I think for, therefore indirectly, no matter which of these countries you're in, is whether you can plug into that global liquidity pool. It's not a single country exchange or investor group. All of these, and the reason why Bitcoin and Ethereum have much higher liquidity than many of the utility tokens we saw recently, is that they have global audiences of communities and traders who can access the same liquidity pools. And it's basically, that's really what we're trying to protect, and I think it's what, there's no single country solution which is going to protect that. It has to be coordinated.
So is that maybe the solution to the thing? And you said two interesting things. One is the decentralization as we're doing it in the technology, also legally wise. You guys are across in different countries, you're active, and there you are adapting as necessary. Maybe that's one point. And the other point is then you said that the actors themselves, the professional investors, they are able to adapt and go here and there. Now, is this good for the retail client, or is this something that leads us into, that's great, but only for the institutions?
And the one qualification to that is actually one of the countries we don't serve is the US, and it's one of the only ones we don't, as well as a few other minor exceptions. And actually that damages the retail investor there more than the institutions. The institutions are very able to set up trusts or other structures in other jurisdictions and still to trade and invest into this space. It's that retail market, and that's going to be even more impactful in other countries who are cut out by that.
So as long as you limit yourself to a certain stage, it does work, and maybe you exclude the US. Now, if you hear this, how do you feel, David?
Frustrated. Our organization is dedicated to funding the revolution. That's our mission statement, right? So how do we do that? We've been able to, our members have funded and written checks, but our members tend to be affluent or institutions, so they have offshore vehicles and there are ways to do it. So does the average retail investor get to participate in the United States? No. And that's really unfortunate. Will it happen anytime soon? In certain states, but then again, the feds can come and preempt anything at any time. But there's plenty of capital. In the United States, Lord knows there's plenty of capital. And there's a whole bunch of folks trying to get in, and people are figuring out ways to go through Estonia and become, open an account on an exchange that way and do that. So that's happening, but institutionally, it's going to be tough for a while in the United States.
So the country of the free is free for the big institutionals.
Exactly. We're
Always
figuring out a way to
do
do
it.
asset. Well, look at the way my government is going right now. I mean, unfortunately, yes, we can wave that flag, but it's not as free and as open as it used to be.
This is why we at Smart Valor, that is the thing what we're promoting for Switzerland. Now, besides the East and the West, there's also a place in the middle. And this is where we try to bring the things together. Obviously, the legal side is a huge topic in it. And there, fortunately, here in Switzerland, in Crypto Valley specifically, we do have a quite, not an easy, but a very supportive government, which does give us guidance and does not control it, but helps it to go ahead.
But I think there's one thing.
I think
one thing that I'd like to just mention that's important.
I think we'll need to leave. So,
Okay.
Will, thank you very much for having been around.
Thank you for having me on the panel. And if you'd like to hear more about Bitfinex, you can contact me, will@bitfinex.com. Sorry about that.
Have a safe flight. So, thank you.
You were saying.
I just wanted to mention one thing. We're all talking about regulation, and that's one thing, but I think it's important to note is just the economics. We've had the ICO market collapse, and I always get these questions. Is the sentiment better in Asia than in the US or Europe? Sentiment's bad everywhere, I want to be clear. If you're going into China, you're going to have the same kind of sentiment issues in Hong Kong, Singapore. We were just recently in Moscow. So the reality of all of the investments or the lack of investment is the lack of opportunity, the belief that utility token model is broken. So in the end, I'm less about the regulatory framework, but what is the actual economics? Do these projects make sense? That's what really drives investors to invest. For any one nation to be better than the other, you have to have products that work. We're in a kind of funny situation now because we're transitioning into security tokens, but we need to have good projects for the nations to actually invest in.
Agreed, 100%. So if I
Is the same.
I agree with Joanne here for sure. The investors in the future will be more and more sophisticated, and they have to look into the fundamentals of those projects, not like what we have done in the past few years for the ICOs. Therefore, the securities tokens investor will be what I call the classic investors, the traditional investors. They will pay a lot more attention on compliance, on also the fundamentals of the project. And Hong Kong investors are actually very sophisticated. So whenever you go there, you want to ask for money. Possibly there are a lot of the real VC investors like what you have in Silicon Valley. However, when you do the securities token offering and you want to grow your company in long term, Hong Kong might offer a big group of investors there. And plus, I like to say that China has been always one of the largest markets for the application of blockchain technology. Therefore, if you base your company in Hong Kong, it will be easier for you to get into the Chinese market. And by the way, Chinese government has been very specific. If you don't do any cryptocurrency or token issuance in China, you are okay to develop your technology there. So therefore, I would suggest people to put their company headquarters and capital operation in Hong Kong and then do business in China. So that's the way to capture both the money side and also the fundamental side. And Hong Kong will be a good choice there for sure.
Now we've seen different points. Now, what I would like to ask you is, it does not look too good for the retail investor, for the standard blockchain investor, right? For cryptocurrency investors. Now, is it really that bad? If you can just give us a little bit of an overview, what is the good side and what is the bad? Like if you can just wrap it up. Or is it only really for the institutional investor?
Well, for the crypto, I think that we no longer talk about cryptocurrency anymore. We are talking more about the STOs or the blockchain changing the world. Those projects will have real fundamentals in the future. And what we have seen in the past, those ICOs most of them are really terrible. They're hitting they are cheating the clients, they're cheating the investors, and in the future we have to see the real STO projects with real fundamentals. And the Hong Kong, I think what Hong Kong offers is a free market economy. They encourage people to go there to comply with the existing security law, but also do their project in a free way. So
I would just like to say that this is technology cycles, right? I mean, we've seen this before with the dot-com era. There's a lot of noise. There was bikini.com that got funded. I mean, there's ridiculous things. We have now, finally, I think, started the washout of a lot of noise. And yes, everyone is becoming much more sophisticated and putting analysts on evaluating investments. And I believe that trillions of dollars is wanting. There's a new way to make money. So there's not necessarily getting alpha and anything else. So people are focused on this space. It's now about to become a lot more institutionalized. That's what I think is happening, and that's what people are getting ready for. So the capital is coming, but that still doesn't answer or address the issue of quality projects. And we're focusing on, everyone I know is focusing on that. Where's the quality coming from? Who really, at this point in the game, what's the blockchain? No more just the buzzwords. Now in the vision, which was talked about earlier, now because I had an idea in a white paper, you're going to fund me. It's now the reverse. It's now, what's the product? Show me a proof of concept. Now, let's see if I should be able to, can fund this or not. That's where we're going.
So we're going into securities, we're going into quality. We do have more important, more sizable institutional investors acting in this space. The space is growing up. That is why it is important to set it up the traditional way, pretty much. Mm-hmm. Does this make an effect actually on the daily trading side or something? Is that relevant, or does that pose a potential for the future to get to the good qualities?
Well, I think it's important to note that there are businesses today that should never have tokens. There are people who are building businesses in blockchain and that raise money for ICOs who have no idea how to circulate a token. That's why I think the ICO market has collapsed. Some of them actually probably can run businesses very well. Some of the money that was raised for ICOs, if you take the token out, is probably a viable project. But I think on that side, it's very obvious now that only a handful of ICO tokens will actually work. From the investor side, I think there's an institutionalization that's taking place in this industry, where it's going to be very much similar to what we saw in the hedge fund industry. And it's evolving, where we're going to see professional money managers who have really years of experience managing money, proper risk management, proper institutional stacks in terms of back office. The whole idea of having custody, the private keys that are secure, the ability to have institutional custody and not just put it into a small treasury wallet. So these are all things that are happening in 2019. It's very interesting that the world comes to the same conclusion all at the same time. But because of this washout, I will share with you one belief that I always have. If you have 0.1% that change the world, I'm more for it than not. And then what we've seen has happened is that we would have never had a transition into security token if we didn't have a utility token.
Yeah,
because it captivated the minds of all the people in the world that you can have this liquidity in a startup. But if you didn't have this transition point, you would have never had a security token.
Yeah. I think I like that as a positive note on the end, because this is where we're seeing this industry is growing up. It is getting bigger, and some part is getting weeded out. But that is bringing companies like ours, associations, the actors in the market. It brings us to get better, to do more due diligence, to do more process-wise, to give more information, and not have this freedom that we had last year, which is interesting, but you can be of two sides. And I think this is what is bringing it up to, once you have the quality, that is most likely. That is what I can say out of Switzerland. When you have the quality, that is what the government is liking. The regulator does like that, and then it does not limit it only to institutional investors, but it step by step goes into the direction that this whole industry is about. The decentralization and participation of everyone.
Mm-hmm. Agreed.
So thank you very much, Jade, David, Juan. It was great to be here.